We also follow the best YouTube channel in the world that offer free live training session, free live coaching, streaming live on this platform. Anytime you got a chance to stop by, you will always find me here. I will always talking about money, how to become successful. Our goal is to make you become successful. But in a manner for you to become successful, you need money, and money is the best thing that you can have to allow you continue your journey to success. So our videos are on demand. Anything you find on this video is because of people watching our previous video with some line of comments and things. They ask us questions, we answer them into new videos. We produced the other day video about angel investors. So we are continue with angel investors video. So become an angel investor with little money breaking down is the title of this video. It's a video on demand because the public asked for us. Remember last video we're talking about the 8 type of investors. We're talking about corporate investor, entrepreneurial angel investor. We're talking about enthusiast angel investor, micromanagement angel investor, professional angel investor, mentor angel investor, head angel investor, and dark angel investor. So today we are talking about become an angel investor with little money. First, you have to have enough money to become an accredited investor. That is the fact. But then you need to know how to analyze proposal and businesses. So you have to understand how to read a business plan as well, determine which business are worth for investing or not, which one to avoid. So before you start putting yourself in a position of becoming an angel investors. So we will talking about all these in this video. So becoming an accredited investor, angel investing is not just for everyone who seem interested to become an angel investor. There are some legal requirements that you have to meet. So we are telling you that not everybody can become an angel investor because according to the Security Exchange Commission SEC in the United States, you have you have to first become an accredited investor before you venture into an angel investors. So that means that you and your spouse must have at least $1 million in asset and earn nothing less than $2,000 or $3,000 per year. Or 1 million asset doesn't include the value of your primary residence. You must also be able to show proof that you have maintained income up to 200,000 in the last 2 years. So to become an accredited investor, this is the requirement for SEC. However, understand the risk. Even if you can make a lot of money from angel investing, you may also lose a lot of money as well. It is very important that you fully understand what you are getting to before you a heads up an eventual capital or angel investment. One of the way to reduce risk is always carry out proper due diligence before you invest in any business whatsoever. Only invest money that you are willing to lose is if you do not plan if you're planning things correctly. If you do not planning things, you might lose money. Okay, join an investment platform or group. You need to be able to find a valuable or viable startups you can invest in it. So easily you can find them if you are registered as an investment platform in a group. So you might find yourself online and an angel investment platform. Some of the most popular platform angel investment include angel list, seed investment, we fund, fundrise, start engine, cycle, fundable, crowdfunding, equity net, and reality mongol, or local state, local stake, things like that. So I give you some few names. You can do your own diligence to find more. You should also attend a lot of startup showing case event, conference, seminars, and they want uh, any show that talking about new businesses and government fund for businesses as well. So SBA loan, things like that, you can get your hands on them. So it's important that you be a one of startup or understand how startup working before you start consider to put yourself into an angel investment deal. You can also consider an higher professional fundraiser who act as a broker between investors and startups. So you can start operate with these people as well to help you find businesses and potential and carry pre-qualification and due diligence when they find business that meet your specification. They arrange a meeting between you and the aspiring entrepreneur, and you can sit down and listen to the pitch deck, okay, for the business ideas they are about to get about to dive in, and you're about to get involved then, and you might sit down with them and talking about the business. Understand there's a factor to consider before you investing in any startup company. As a stakeholder, you have to find out the profile of experience, skills, and credibility of the entrepreneur and every person that will be involved in planning management of this business that you should consider. This is the most. Before you do anything, you must understand that business potential. It's another thing. Consider it as a viability of the business, of the business idea being proposed. Understand if the business is valuable, if it's valuable and viable. Okay, you have to consider all parameters to be sure that the business stand has chance to succeed before you start investing in it. Internal and exchange factor. There are a lot of things to determine whether a business would be successful or not. For instance, demanding any and supply the government policies, industry trends, inflation, and technology have a lot of impact on the success of your business. You have to understand the benefit as well. You also have to consider what is and for you, what you can find in this business if you put your money on it. You should ensure that all the term and condition are split and favorable for you before you start putting your money into in as an angel investor into a company. You have to understand the management as well. Sometimes the entrepreneur will be different from the people who will manage the business. In case you have to know who the manager will be and whether or not they have qualification experience to successful management of business, because you don't want to put your money in something that will not work. You have to understand the revenue path as well. How does the company propose to earn money? You have to have a clear idea where you're going to make your profit from the business, and you have to talk about the exit strategy. It's important that you should know when to get out from the deal you are about to put yourself in. So, question to ask before you start become an angel investor, before you invest any fund, okay, you have to ask this question to the person that presents you the deal. Who are they? Who are this person? What qualification and experience they have, and all the other background to help you have an opinion about the credibility. It's important to ask this question. Okay, major competitor challenge a product or service, propose, fix the gap to design to fill. Okay, understand that target the customer or the reach them, marketing, promotion, and service. Okay, amount of the fund that you need to know, period of investment and strategy, investors return on investment. This is the things that you want to know and understand your exit strategy. If you do that, if you do all these things, now this is how you can become an angel investor with little money. It's start an investment club. Yes, but you have to understand all these things. An investment club, less than 100 people, it's legal. You don't need the SEC approval to do that. So you pull your money together, create a group of people that think like you, and start putting money on startup business and become a successful angel investor. I believe I share with you a very, very practical manner to start invest and start up business with little money. My name is Andrew JKEG. You're watching my booster motivation. That was it for today. I will see you on the next video.